Every Monday to Friday, this is Peter Lewis's Money Talk.
Money Talk.
Good morning, this is Peter Lewis, welcoming you to Money Talk for Tuesday the 7th of July. Thank you for listening and helping to make us one of the most listened to business and finance podcasts in Hong Kong and Singapore. That's according to podcast rating service Podstatus. This podcast is sponsored by Surfing Group, which is headquartered in Singapore and offers online financial services to 90 million customers across 10 countries. In today's business and finance headlines, oil and gas tankers began cautiously transiting the Strait of Hormuz again on Sunday, navigating a US protected corridor close to Oman's coastline. Western navies continue to warn that the threat level remains substantial, with the centre of the strait believed to be mined and Iranian forces still harassing shipping, prompting many vessels to sail dark with transponders off. Donald Trump heads to Turkey this week for a tense NATO summit, where he will meet Ukrainian President Volodymyr Zelensky amid frustration over his inability to end Russia's war and growing friction with European allies over defence spending and the recent Iran conflict. The visit comes as Russia launched a major air assault on Ukraine and as Trump demands NATO members immediately raise defence budgets to 5% of GDP, a level far beyond current commitments. South Korea is preparing to channel an unprecedented tax windfall from its AI-driven semiconductor boom into a new national investment fund, aiming to convert record profits at Samsung Electronics and SK Hynix into long-term economic strength. With analysts forecasting more than $65 billion in annual corporate tax receipts from the two chip giants alone, President Lee's administration says excess revenue should be deployed to finance mega projects, expand critical infrastructure, support startups, and address widening social inequality. SK Hynix kicked off its formal marketing process for its $28 billion listing on Monday as the South Korean chip maker looks to capitalise on surging investor demand for the high-flying memory chip sector. It may be the biggest ever first-time share sale by a foreign company. Until now, it's been difficult, if not impossible, for American investors to bet on the company, which makes memory chips used in AI computing. The stock has soared more than 760% in the past year. Starting soon, though, US investors will be able to buy shares on the Nasdaq. On today's Money Talk, we're joined by Mark Michelson, Chairman of the Asia CEO Forum at IMA Asia, Nick Marro, Principal Economist for Asia at the Economist Intelligence Unit, and in Washington, D.C., our US economics correspondent, writer and broadcaster Barry Wood. On top of all of that, today's Asian Business Newsletter is now available. You'll find it at peterlewismoneytalk.substack.com.
Peter Lewis's Money Talk.
On Wall Street Monday, tech stocks rebounded and the Dow closed at a new record as US traders returned from the long weekend. The S&P 500 gained 0.7% to end at 7,537. The Dow climbed 156 points, or 1/3% for a record close of 53,056, its 21st record close of the year. The Nasdaq Composite advanced 1.1% to 26,121. Treasuries rose across the curve, sending the 10-year yield down 1 basis point to 4.47%. In the currency markets, the dollar initially strengthened against a basket of currencies before giving up gains. The US dollar index was flat at 101.07. The Japanese yen lost ground against all major currencies as traders tested the resolve of Japanese authorities to intervene. It weakened 0.4% to 162.06 yen per dollar on Monday. The offshore Chinese yuan fell 0.2% to around 6.79 renminbi per dollar. Gold reversed course after hitting a 2-week high earlier on Monday. Spot gold was down 1/3% at $4,165 an ounce. Brent crude oil futures fell 0.2% to $71.99 a barrel. Bitcoin rose 2.9% to $64,200 on Monday after Donald Trump championed cryptocurrencies in response to a reporter's question about whether the asset might make its way into Trump's accounts. Asian markets were mixed Monday in the absence of guidance from Wall Street. South Korea's Kospi fell 0.5% to 8,051. The index is still up over 91% year to date. Japan's Nikkei 225 was unchanged at 69,738. The benchmark index is up 38.5% in 2026 so far. Chinese markets closed mixed on Monday. Hong Kong's Hang Seng Index climbed 266 points, or 1.1%, to 23,616. The mainland CSI 300 was flat at 4,842. Futures markets in Asia painting a mixed picture for the open this morning. In Hong Kong, the Hang Seng projected to start 0.1% lower. Looks like the Nikkei 225 in Japan might rise about 0.6% at the open. And you can get more details on the latest market movements in my daily newsletter at peterlewismoneytalk.substack.com.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
All right, plenty to talk about there. So let's get the views of our panel of guests this morning, which consists of Mark Michelson, Chairman of the Asia CEO Forum at IMA Asia. Good morning, Mark.
Good morning. Good evening, Barry.
And also joining us up in Hong Kong is Nick Marro, who's Principal Economist for Asia at the Economist Intelligence Unit. Morning, Nick.
Good morning, everybody.
And over in Washington, D.C., as always, on a Tuesday morning, fresh from his trip to Asia, we find our U.S. economics correspondent, Barry Wood. Hope you've recovered from the jet lag by now.
Yes, I'm getting there. Peter, but good morning, everyone.
Well, look, as you're getting there, let's put you on the spot, first of all, and ask you about the US economy and the jobs data that we had out last week. 57,000 jobs created, quite a bit lower than what economists were expecting, down from 129,000 in May. But that wasn't really the standout number. What did stand out is the big decline in the share of the population that is working or looking for work. That's the participation rate. It's dropped to its lowest level in more than 5 years. If you exclude the COVID era, it's the lowest participation rate in 50 years since June 1976. 722,000 people dropped out of the workforce in June alone. Barry, where have they all gone?
Yeah, on that one, I'm very weak. I really don't know. I'm going to lean on Nick and Mark for the answers to that. I really can't explain the shrinkage of the workforce, the participation rate. It's a puzzle to me. One of the excuses I can offer is I was gone for about 2 weeks of the past month, and I've been out of it in that respect. But in terms of the job number, yeah, it could be a blip, it could be a trend. There's no doubt that we have a bifurcated economy. If you've been in the stock market, and that's maybe half the people in the country in terms of households, you're doing all right. If you're not in the market, you're suffering from inflation, and jobs are increasingly hard to get. College graduates are having a hard time getting jobs. I know that from just surveys that I've conducted here in Washington among young people, and they're pessimistic. They want to work and they can't find jobs. They worry about AI causing layoffs, which we've seen throughout the tech sector, and they can't find meaningful work. There is, of course, a shortage of car mechanics, air conditioning people, and other blue-collar jobs that pay a lot of money, but college graduates usually are not thinking along those lines.
Well, look, I've heard three reasons as to why potentially the participation rate has dropped and where these workers have gone. So, Mark, maybe you might have some thoughts on this. But the first one is that some of them have just retired. A lot of people are retiring early and dropping out of the workforce because they just don't want to work anymore. The second one is there's quite a number of people who are taking their gains from the stock market and basically giving up their jobs and just doing their own thing, often working for themselves, using AI on the internet. And the third reason is that immigration is much lower than it was before. So as a result of the Trump crackdown, so there's far less workers, potential workers coming into the country. I don't know, Mark, if that makes any sense and if you have any thoughts on that.
Well, it's not my area of expertise either, but those are the three major things that I've heard as well, and it makes some sense. And it's interesting that Barry was just describing about young people having trouble finding jobs in the U.S. I hear the same from my students in Hong Kong. for some of the same reasons. A lot of it is related to AI. It's not just in tech industries, but a lot of places they're just using more technology. Of course, China is really using more of it, probably percentage-wise, than even the U.S. So that's having a big effect. But I think a lot of people aren't looking, or if they are looking, and we're finding this, and even here when people that we're hiring or some of our clients are hiring, that they tend to, the younger hires tend to be shorter term, and they're looking for other things and not sure if they want to be in a career. In fact, many of them don't want to be in a career, and as such, they don't seem to mind being away, and they'll try to do their own thing, as you suggested, Peter, looking for entrepreneurial areas where they can grow. And the fastest growing, still, I think, the part of fastest growing membership increase in the chambers, especially American Chamber these days, is startups. They're small, and they're often younger people that are doing it, and frankly, many of them don't stay as members very long, depending on how they do. But that's sort of more. I don't know if it's a trend yet, but it certainly is indicative of what's going on.
Well, Nick, I'm interested in your thoughts. I mean, first of all, where are all these workers going? And also maybe, is it just a US phenomenon, or is this a global phenomenon that we're seeing sort of around the world, in other parts of the world?
Well, I think the anxieties, for example, around AI are definitely a global phenomenon. And it's interesting because when we talk to, say, companies operating in this space, they will attribute this to kind of wider structural issues, not necessarily AI. So, for example, the big kind of boom in post-pandemic hiring a couple of years ago, particularly concentrated in the tech sector, which might be unwinding now just for, I guess, natural reasons. But I mean, at the same time, that's not going to do much to tamper down those anxieties around AI replacing your job. And I think when it comes to particularly entry-level positions, it's data prints like these that validate a lot of the fears. We're also still on our end trying to figure out what this points to. One thing that we've also considered is the fact that younger people are maybe extending their education because they are unable to find those entry-level positions. But I think when we extrapolate from the data and think about what this means for, say, monetary policy, we're expecting this to reinforce the fact that the U.S. Federal Reserve will likely keep monetary policy on hold for the remainder of this year. A couple of weeks ago, the market consensus was expecting a hike. We never actually moved in that direction. But given kind of the softness in this jobs print, alongside the fact that oil prices have really slid back to kind of pre-war levels, the underlying kind of inflation shock and weakness in the unemployment picture, or weakness in the employment picture rather, suggests that monetary conditions probably aren't going to tighten any further. So I think this is going to be something that we'll need to see if it extends to other markets globally. This is just one data print, so we'll need to see if it's the beginning of a trend or something. But yeah, implications for kind of broader policy settings in general.
There's a couple of contradictory things, really, isn't there? Because on the one hand, there's a shortage of workers, but then on the other hand, you have particularly young people, graduates, reporting they're finding it really hard to get a job. And the youth job, I mean, this is true also out here in China, isn't it? Where the workforce is shrinking quite rapidly, but yet the youth unemployment rate is around 15%, and lots of graduates saying we just can't find a job.
Yeah, that's this skills mismatch, particularly in China, is something that we've been following for quite some time. I mean, the other flip side of this story isn't necessarily employment, or unemployment, but underemployment. The fact that you do have people, young graduates who are entering the workforce but unable to find work, with the skill set that they ideally want to deploy or match their qualifications. And so you have a lot of people going into the gig economy, for example. I think there was a report from South China Morning Post a couple of months ago illustrating that I think up to 40% of urban employments in China was supported by the gig economy. And so, I mean, this is kind of an example of this. And I'd be unsurprised if these factors are also present in, say, Western countries. But it's worrisome in the sense that, the gig economy doesn't necessarily provide a lot of social welfare. It's a lot less stable in terms of benefits or career progression. And so although policymaker attention tends to be on the unemployment number, underemployment, I think, is really where a lot of the main stress actually is.
Yeah, it's a long way from lifetime employment.
Go ahead.
No, long way from lifetime employment. Just want to reinforce what Nick said. Again, it's a small sample, but we started a couple of our courses at CUHK during the global financial crisis. You remember that, and it was partly because we thought there'd be a lot of students from China and elsewhere looking for jobs and not finding them, so they might want to go to school longer. Now it's sort of come full circle, and a lot of them are extending their stays in master's programs and others until they find something and become a little creative. So exactly what Nick was saying is what we're seeing.
Yeah, and I was going to reinforce what Nick said about uncertainty. I think that uncertainty, the fear of AI, is really a disincentive. I've been with a lot of Uber drivers in Washington, D.C. and in Seattle, Washington in the last 10 days. And I was surprised. There seems to be a couple different groups. One is the immigrant group of people who are working one or two jobs and really quite content. Everyone wants Uber to pay a bigger percentage because that was cut back over the last year or two. But they're doing it. And they're also doing another job. And they like the flexibility. I don't see that very many of the Uber drivers in Seattle wanted to deliver food. They want to do people. And so it is. And also, I think I was surprised to find young people driving Ubers who had at least some college. Ask, why are they doing it? They said, well, it's available. I could not find another job, and I'm going to stay with this gig economy job until something opens up. Mm-hmm. So there are jobs out there. And I should mention as well, we have shortages of plumbers and electricians. But again, I don't think the college graduates are going to immediately gravitate in that direction. But if they can't get work over the next year or two, they would.
Mm-hmm. Well, while we're talking about AI and jobs, maybe we can discuss this new investment fund that Korea is going to set up to try and spread around, if you like, the benefits from the AI revolution. I mean, Barry, you were in Seoul a little while ago, weren't you? And you reported to us then about this plan to pay big bonuses to people, at firms like SK Hynix and Samsung who were involved in the semiconductor industry. But that was causing quite a lot of tension for people who were outside those particular companies and those industries who weren't getting the benefits of that. So what Korea is planning is an investment fund using the tax it already collects from the companies in that sector. And they're saying $65 billion worth of taxes paid just from the two chip giants alone. So that could be used to go into an investment fund and then use that to try and deal with some of the social inequality that arises from the AI boom, as well as investing in future sort of infrastructure and startups. So what do you make of that, Barry? Is this a good way?
Well, I'll tell you, I think that President Lee is probably deflecting a lot of the criticism of the bonuses to the chip sector at SK Hynix and at Samsung into both the announcement he made with the presidents of both of those firms just a few days ago of the massive investments in new chip factories that the companies are going to build in the southwest part of South Korea. But there's also a feeling in Korea that the Americans are not going to be very happy with this, i.e. the Trump administration, because they'd like to see that money invested in a chip plant in the United States, not two new plants in South Korea. This investment fund, I haven't looked at it that closely. Peter Kim, no doubt, has a very clear understanding of what it means. But I think President Lee is demonstrating that he's a pretty skillful politician.
Mark, is it a good way of trying to deal with some of the sort of inequality issues that are arising from the AI revolution?
Well, I agree with Barry that it sounds like an attempt to do that. What kind of impact it'll have, I don't know, because it's not a $500,000 US to each individual, as we're talking about for Samsung and SK Hynix. So I think people in Korea will understand that. And I think Barry also recognized a serious issue with the U.S. because here are these big deals that Korea has made, supposedly, with the U.S., Japan has made, India, etc., hundreds of billions of dollars, and a lot of them involved, as you say, Barry, setting up plants in the U.S. This is going to make it difficult to do that, I would think. So I think it's a slippery slope. I understand why he's doing it, and maybe it'll work, but I think a real
well, good luck
slope.
to them. And Samsung has got this plant outside of Austin, Texas, that will soon come online. I think even in the next few months. But I think Donald Trump and his emissaries will be saying, "Well, how about another plant? You guys are doing so well, and NVIDIA and Google and a couple other American firms are your principal purchasers of those specialized chips from SK Hynix and from Samsung. So this is rather complicated. Let's not forget, those two companies in South Korea are now in the $1 trillion U.S. market capitalization category. It's an extraordinary boom. And Peter, you mentioned at the beginning the extent to which the stock price of those companies has increased, and indeed the overall Korean market over the last 18 months. So it's a very interesting development, and I'm not sure really what it means.
And a small issue is, look how much the U.S. is spending on Korea's defense. Can't you spend more? Aren't we spending too much? So we've heard that before, but I think that could ramp up again as well.
Nick, what are your thoughts on this? I mean, there's no doubt, is there, that there are challenges from the AI boom, and in particular, how to make sure that everyone benefits in some way from it, and maybe not just a small group of people who directly work for maybe chip companies. And this is an issue not just for Korea, we're seeing it in Taiwan and elsewhere. So what are your thoughts on that?
Yeah, right. I mean, we're actually looking at this across all of Northeast Asia, actually, and inclusive of China and Hong Kong as part of this, given that when you look at economic drivers these days, it is almost overwhelmingly tied to AI. And when you kind of break down the composition of economic growth, private consumption, non-AI related investment or non-AI manufacturing is really struggling by comparison. So, for example, if you look at South Korea, in June, semiconductor exports grew by over 180% year on year. And then when you compare every other category, that amalgamated category is around 23% year on year. Still pretty impressive for any economy, but nowhere near that 180%. And that gap is massive. And for Korea, we've really, chips have always outperformed, but we really started to see this gap widen from late 2025. And in Taiwan, this was happening a bit earlier. I think what's illustrative as well is that these trends tend to start in Northeast Asia before then being replicated in Southeast Asia based on supply chain composition. So we're seeing similar things start to pop up in places like Singapore and Malaysia as well. The reason why this matters is that this K-shaped economy discussion is making a lot of people feel very upset about the fact that they're not being able to equally play in this AI boom. And from our monitoring, South Korea seems to be the only economy that's trying to address this. This has been a long-standing issue in Taiwan, for example, but I haven't seen as aggressive policy moves by their government as we've seen in Korea, at least to the extent that people are talking about having this AI dividend and talking about kind of spreading the wealth more equitably. I think this is important because if you're not in the AI sector, you are not necessarily feeling that the economy is booming. You're not receiving those massive bonuses at Samsung or SK Hynix. And so, the headline growth numbers, the headline export numbers are not necessarily indicative of what's happening on the ground. I think policies like these are really important because it's illustrative, or it shows recognition of the fact that there's still a lot of underlying economic weakness in other parts of the economy that need to be addressed. That's something that we're looking at in Taiwan, kind of on the flip side, in the sense that the government is not doing enough to address this. And we have local elections in Taiwan coming up in November, which are likely going to go against the government's favor, given kind of anxieties and anger over all of this. But yeah, this will be an interesting kind of trend for the region, because I personally think South Korea is the most advanced in terms of these discussions on this topic, and the willingness to kind of bring forth this idea that the AI boom needs to benefit everybody, and the degree to which government and society are receptive to this, and companies are receptive to this, could be instructive for the wider region as well.
I mean, what is interesting about this, of course, is that all these government plans to invest in the AI sector to try and keep the lead it's not just South Korea, is it, that's doing this? I mean, in Japan, Takaichi's got a $2.3 trillion investment plan to try and build out in AI. And unlike in South Korea, where it's coming from revenues, that's way too big to come from just revenue. She's going to have to borrow money to go and do this as well. So it's sort of like, it does raise issues, doesn't it, about the scale of the investment that governments are trying to make into this sector.
Yeah, well, Korea may not be perfect situation, but as Nick says, they're in a better position. Japan, you just mentioned why, raising the debt to GDP ratio even more, if that's possible, in Japan, and in Taiwan, the term aggressive policy action is a non-starter, given the domestic political situation for anything, let alone what we're talking about now.
I mean, we've got the Bank of International Settlements warning about this, saying that, look, it's all very well, all this investment, but it could lead to a big bust. We've seen this before, haven't we, where there's been overinvestments in certain sectors. Barry, I mean, is this a risk here?
I think it is a risk. And I was quite surprised that several in South Korea believe that this is clearly a bubble in their economy. And they're really looking at those two chip companies, the exporters, SK Hynix and Samsung. And is this a bubble? We have looked at this in the past, and I guess sort of informally concluded it's not a bubble. Certainly, most of the American hyperscalers have been using their own funds to do the capital investment that they're massively involved in. But now they're selling stock and selling bonds to do that. As Alan Greenspan famously said, you never know a bubble until after it has burst. And I think I would hold to that. It doesn't look like a bubble here in the United States, but certainly the valuations are excessive.
Nick, what are your thoughts on this, on the BIS warning, and is this now becoming sort of irrational exuberance?
Yeah, I mean, the reason why I'm hesitant is that we've been having similar discussions as well, in the sense that, I mean, it looks like a bubble, but then it's not a bubble. I mean, some of the massive capital expenditure plans that are being projected through the remainder of this decade really suggest an anchoring in spending that's just going to be a lot more kind of grounded than maybe past bubbles. But one thing that kind of puts us on pause is the fact that this really has to be the year where AI is operationalized, and we start to see, really significant returns on investments as part of this. When we look at some of the indicators here, memory chips, for example, prices are surging because supply can't keep up with demand, and that's all nice and rosy. But the question is, what is actually happening with demand? Is demand really going to be sustained? Is it going to continue? Our view is that by the second half of this year, demand is probably going to soften slightly from the current exuberance that we're seeing, not necessarily lead to a correction or like a crash or a pop of that bubble. But the levels of just enthusiasm that we're seeing right now seem like they're going to eventually give way, particularly because we are now starting to see companies recognize that, after slashing their workforces, they actually need to bring people back to replace some of the things that AI couldn't actually do, or to do the things that AI couldn't actually replace, rather. And I think that this euphoria that we're currently seeing, it is going to have to come down from its current fever pitch, which has implications for, say, Asian policy, Asian export growth, Japan's investment plans. I think what's interesting, too, to look at the Japan example, is that the investment plan that was released is potentially very, very significant for Japan. We're estimating that it could raise growth by 1%, but the forecast levels of investments are still slightly below kind of the heyday of investment that we saw in the 80s, late 80s, early 90s. So it's bringing Japan back to this level, but it's also driving a lot of investor anxiety over kind of fiscal sustainability. And to your point, Peter, about how the government might have to rely on debt to finance this. And I think this is kind of playing out in currency markets, whereby we are seeing the yen still trading at record lows. Our forecast is that the yen is going to be within this band of 155 to 165 through the remainder of this year. And a lot of this is going to reflect maybe this mismatch in terms of goals like fiscal consolidation versus this very expansive spending policy, and what this all means for the Bank of Japan's normalization process and how that's going to interact with this debt sustainability. We're not necessarily very concerned about Japan, but markets are, and that's having an effect on the yen.
We're seeing that with bond yields, aren't we? JGB yields surging to, well, not just multi-year, multi-decade highs.
Yeah, that's exactly right. And I think there's, elements of kind of inflation and geopolitical anxieties baked into that. But for Japan, it's very much too a story about that fiscal sustainability element.
Okay, let's move on. There's some geopolitical issues going on as well at the moment. An interesting survey in the Financial Times yesterday found that voters believe, the US voters anyway, believe the war in Iran wasn't worth the cost. The FT survey found 58% of registered voters said the war hadn't been worth the cost. 44% said the war had left the US in a weaker position with Iran. 66% said the so-called Memorandum of Understanding between the US and Iran would make either little or no difference to peace or stability in the Middle East. So, Barry, this is hardly a resounding vote of confidence in Donald Trump's policies, really, is it?
Correct. I must say, this is a survey that matches my own anecdotal survey of people that I talk to across the country. This war is exceedingly unpopular, and Donald Trump's popularity is swooming as a result. I'm not sure where it goes. Donald Trump has been exceedingly lucky. The oil price is now retreating. It hasn't gone to the highs that were predicted. Traffic seems to be moving through the strait. The expectation is that the ceasefire or the no war, no peace activity between Iran and the United States is going to be extended. That seems to be a positive element in all of this. But my goodness, the popularity of some very left-wing people in the Democratic Party, I wonder if that is related to the Iran war that has now gone on. It started February 28th. So it's not a surprise, the survey that you mentioned, Peter. I'm not sure what it means for Donald Trump. He's going to be in Istanbul talking to people most of whom he has met with just a couple of weeks ago in France. But he's on his back foot, but he's a lucky guy.
Is this going to have an impact on the midterms in November, or do you think it will all be forgotten about by then?
No, I don't think it will be forgotten, unless, as Donald Trump likes to say on his Truth Social, all the prices come back down and the gasoline price comes back down. By the way, gasoline prices are not back to where they were in January, not far from it. They're still quite elevated. But we shall see. But in terms of your question about will it impact the midterms, I think that's baked into the cake. That's going to happen. And I think probably the president expects that he will lose the House of Representatives in the midterms.
Mark, what are your thoughts on this? I mean, obviously, it's not really a thumbs up, is it? But it can't really be a surprise either, given that he promised during his election campaign an end to these types of excursions into foreign countries, and yet here he is. He's got the US mired into one of the biggest ones we've seen for years.
Yeah, it's just unsettled. And again, bread and butter issues are really important to American voters, to all voters, I guess, to some extent. And in that sense, things are maybe getting slightly better, as Barry has mentioned. but still, the unpopularity of the war, all these other big issues, big and small issues that come up, including rebuilding Washington D.C., the speeches that are that tend to be very divisive, as was on the 4th of July, and so on. It's getting too much, I think, for a lot of people. And I agree with Barry. I think the Democratic Socialists, or whatever they're called, have been emboldened because many of them do take a strong view on the Middle East, especially on Gaza and other areas, Lebanon and so on. And I think people, they may not have strong views on them, but they know that it's not going well and it's not been good for them. And they don't feel like things are getting better. So I think it clearly affects the whole attitude. And usually presidents in midterm elections do not benefit when that's the situation. So unless something changes dramatically, and it could, we all know it could, but at this point looks pretty tough, especially for the House, increasingly less so for the Senate, especially what's happening in Maine and other places, but we'll see.
I mean, Nick, I suppose whether voters remember this or not in November depends quite a lot on, whether the economic aftershocks last a long time. I mean, obviously there's oil prices, but not just oil, is there? I mean, electricity prices have gone through the roof in many countries around the world, including the US. Interest rates are higher than where they were before the war, particularly in many countries in Asia. But even in the US, bond yields are higher than where we started. Do you have a sense of, what the economic aftershocks of this might be and how long they might last?
Yeah, that's right. I mean, to be honest, when it comes to kind of actually most major economies outside the Middle East, the shock from Iran wasn't as bad as people had initially feared. It was still very disruptive, particularly for Europe and within the region. But I mean, Asia has been sustained by its export boom. The US has been able to shrug off a lot of this. I mean, one of the reasons why inflation is still relatively sticky is just because consumers continue to spend, and that does reflect a degree of willingness and confidence among households in that respect. I think that being said, when we think about kind of what's happening with Donald Trump's approval and kind of the memory of voters, there are some, I guess, very historic data points that we could look at here. So the Economist newspaper has a tracker that's conducted by YouGov, looking at kind of polling across issues. And based on that tracker, Donald Trump's net approval rating right now, as of late June, is at -21, which is not the lowest that it's been. It was -22 in late May, but it is a historic low. And when you kind of divide it down by topic, foreign policy is close to -20%, or excuse me, yeah, -22%. While inflation and prices, how the president is handling this topic, it's at -43, which is incredibly low. And I think it'll take a long time for for voters to accept that the administration is handling this well. I mean, as Mark said, anything can kind of happen in between now and then, and some American voters tend to have a very short memory. But prices, and particularly what's happening at the pump in terms of the price of petrol, that really is what sticks in most Americans' minds when they come to the polls. And I think this is going to be something which the administration is going to struggle to try and unwind in between now and November. I think we're seeing this in other aspects of the policy framework as well. We've seen a ton of threats and investigations and news around new tariffs, for example, but we haven't seen any new tariffs really come into play, except for the Section 122 tariffs that were imposed in February after the IEEPA tariffs were struck down by the Supreme Court. Now, these 122 tariffs are going to expire in late July and will likely be replaced by new ones. But we're seeing the administration move a lot more cautiously in 2026 than we were in 2025, partially because Donald Trump no longer has that IEEPA tool to rely on, but also I think because there is growing sensitivity to what's happening with the economic aftershocks of not just tariff policy, but the Iran war and kind of all the specters of inflation that are still dogging the administration. So, I mean, to be honest, when we look at our kind of broader outlook for the U.S., by the numbers, it's relatively benign. We still see pretty resilient real GDP growth. We're not expecting another rate hike this year. We're expecting rates to stay on hold until 2027. But for the average US consumer, whether that data actually matters for their political choices is a whole separate question. And I think people are going to be really anxious and angry over what's happened over the last couple of months based on the foreign policy developments tied to Iran.
It's a good point. And just to mention the other war briefly, there's one in Ukraine too, which is, you mentioned, Peter, has gotten worse. And we've got the NATO meeting. I think a key issue during the G7, which was just last month, some of you still remember it, the Trump administration, the president apparently agreed to the statement that basically supported Ukraine's freedom and sovereignty and territorial integrity, and also supporting Ukraine again financially to some degree, even though most of that would come from Europe. Will he agree to a similar statement at NATO? I think that's up in the air, but it may happen because it's going to be, his aides have said he's going to be confrontational. What a surprise. But at the same time, is this going to be, because I think that'll be a key issue. It may not have much impact in the short term, but it certainly will send a signal one way or the other.
I mean, this is all set up to be a very fraught meeting, isn't it? Because he's got two big issues. One is he just doesn't seem to be able to end this war in Ukraine, despite promising for months and months he would bring it to an end. He said he would bring it to an end in the first couple of weeks of his presidency. That clearly hasn't happened. Yeah, it's got worse. And then the other big issue is this insistence that, countries spend at least 5% on GDP. Some countries in Europe just aren't ready to do that at the moment, are they, or able to do it? So it does seem that there's going to be plenty of flashpoints in this NATO meeting.
Yeah, exactly. And of course, with the elections, or possible elections coming up in several countries, a new prime minister in the UK, a very disruptive situation altogether.
Do you think Donald Trump is willing to pull the US out of NATO?
No way. No way. But he'll bully the Europeans, just like he's bullying so many people everywhere. But no, I think he's got enough sense of history to know that pulling the United States out of NATO, of essentially giving the middle finger to our friends in Europe, would be not historically judged positive.
Well, let me ask you about it. I mean, obviously you see it differently because you do regard Europe as being, America's friends and, close allies there.
Last I knew.
Yeah, but Donald Trump doesn't seem to see it that way, does he? I mean, look at his attacks on Prime Minister Meloni in Italy, his insistence on taking Greenland as part of US territory. He just doesn't seem to see it in the same way that maybe a lot of Americans do. And it was interesting in that same Financial Times survey that I quoted earlier, they did also ask about whether or not the US should leave NATO, and the majority, quite a large majority, said that they should remain in the alliance. So Americans like yourself clearly believe that, but Trump doesn't.
Well, I think that's a bit strong. Look, he's got problems with all those European leaders. He's got problems with Meloni, but I think these are tempests in teacups. This is not fundamental. The United States and Europe will remain friends. We are, after all, mostly a European nation.
I don't know if Trump would say that. I mean, Nick, final thoughts from you on this. I mean, it's
if you mentioned England, he would. He's got a thing about things British. He's on your side, right, Nick?
I mean, Nick, it's not on the market's radar, really, is it? This NATO meeting, in terms of the grand scheme of things in geopolitics, there's bigger things that people are worried about, that investors are worried about. But should this be on their radar? I mean, it seems an important meeting with some important issues here to be resolved.
I think it should be, yeah. Although, I mean, to your point, I think this is illustrative of the fact that things are just so volatile these days, and there are just so many, maybe too many geopolitical things to keep an eye on. And so you just got to pick and choose what's important to you. And it really shows, when we take a step back, kind of the nature of how chaotic things are. It also means that, it shows the value of having a very strong geopolitical team internally to monitor these views. But I mean, to your point on kind of what's happening with kind of Trump's attitude towards NATO, I mean, you kind of hit the nail on the head in terms of the wider American view, is that this is still an alliance that brings a lot of value to U.S. specific interests, U.S. security, foreign policy interests. And I think that actually is the view that's held by kind of key members in Trump's administration, maybe Marco Rubio being the best example of this, but I mean, arguably, Pete Hegseth as well, to varying degrees. This is important as well because you can take this metric and kind of apply it to, say, the alliances that the U.S. has in Asia and what this means for simmering, tensions over Taiwan, over the South China Sea, and whether the U.S. would be willing to intervene in conflicts there, given that the U.S. is the most important deterrent signal in any kind of potential conflict. But I think that the true kind of point here is that institutionally, we still see a lot of appetite for participation in these multilateral security institutions, including NATO. And I think that's going to be a stabilizing force, regardless of the president's personal opinion.
Well, thank you very much for your insights this morning. Very interesting discussion there. You heard Nick Marro, who is Principal Economist for Asia at the Economist Intelligence Unit, Mark Michelson, who is Chairman of the Asia CEO Forum at IMA Asia, and over in Washington, D.C., our US economics correspondent, writer and broadcaster, Barry Wood.
You're listening to Peter Lewis's Money Talk.
Money Talk.
Thank you for listening to Money Talk this morning. You can find more details about some of those topics we've just talked about in my daily newsletter. You'll find that at peterlewismoneytalk.substack.com. I'll be back with another show tomorrow. Joining me then will be David Roche, President and Global Strategist at Quantum Strategy, and Tim Huxley, Chairman of Mandarin Shipping. And with a view from Japan is Nick Smith, who is Japan Strategist at CLSA. See you tomorrow.
Money Talk.